Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Okay, it is another day. A little bit later start today, but we got it in, so this is awesome. We are looking at a pretty wild market. We had a crazy market today. Look no further than the 5-minute chart. Yeah, pretty wild. So we were down here, 22.9, and Jerome Powell got on and said something, and markets got all excited for about 20 minutes. And then they went down for a half hour, and now we've been all over the map. And this is similar to the S&P. So you can see how we're tracking S&P pretty good. So I have a couple of announcements. First of all, just a reminder, I'm at cryptoinfluencers.com. This is where all my stuff is. This is where my free channel is, and this is where my pro channel is. So this is home base for me. Feel free to sign up at cryptoinfluencers.com for free, and you can follow me there. The other thing is, tomorrow is live stream day. We love Wednesdays because we can finally get a chance to interact a little bit more rather than me just lecturing away. It's a good place to ask questions and see what you can. It's a little bit more interactive, so it's a lot of fun, especially if you have good questions. So if you have a question or two, that'd be awesome. So that's major. And then there was a comment. Somebody said, "Hey, I'm so sad that I can't join the pro channel because it's $100 a month, and I can't afford that." Well, I kind of set the price at $100 a month on purpose. And one reason is if you can't afford $100 a month, then my style of trading is probably too risky for you. Also, I also want to make sure that you have enough capital that it's worth it. You know, if you've got $500 to play with, then it's not going to be worth it. But if you've got $3,000 to $5,000 or whatever as a minimum, and you can handle working through market volatility and ups and downs and learning some things, then it makes more sense. So I kind of set it there on purpose. Also, it's $100 a month because it just removes trolls from our chat. Everyone that's involved is invested and interested and engaged, and it's really positive, which I want to keep it that way. So that is kind of a summary on that. The other comment someone said is, can you look at the DXY? And I would like to. Let's look at the DXY on the daily, and let's compare it to the S&P. We have the S&P on the bottom, and we have the DXY on top. So they are loosely correlated. They're not perfectly correlated. So a lot of people, especially when we're dealing with Bitcoin and we're markets are behaving in a kind of an irrational way, a lot of people out there will talk about kind of anything they can to kind of explain what's happening. And I don't necessarily think, the DXY it makes a difference, but it doesn't make all the difference. So this is S&P on bottom. You can see that DXY is fairly flat and market dropped. It peaked at the peak, so there was a similarity here. And when we went flat again, then markets rallied. We kind of hit a point where DXY started taking off and the markets dropped. And they have been loosely correlated, little peaks and valleys, but overall the trend has been majorly one directional on the DXY, all the way up until the very bottom of our S&P. And then when this turned around, we didn't just go straight up. We still had ups and downs. So generally, a strong dollar index means that the dollar has so much value that it kind of sucks up a lot of other value. So people are wanting to hold more dollars than they want to be holding other assets. But it doesn't necessarily go into the other things. The fact that it has rallied a little bit, so this is, over the past few days, this is a pretty big move. And people are trying to correlate this with a drop in Bitcoin price, and it may or may not be perfectly related. So you always have to take everything with a little bit of a grain of salt. I'll put on Bitcoin down here though, just so we can see. So yeah, when it completely topped out, it was pre-FTX drop. Then FTX dropped out, and almost everyone ignored this. But then we started climbing, and then people think, oh, well, the DXY is going down, that's why. And it's not necessarily. It can have something to do with it, but it's usually loosely correlated. So hopefully that answers the question on that. And in case you're wondering where I find questions, any comments on a YouTube video or any comments in the chat, if you go to chat.cryptoinfluencers.com, you can actually you can chat with the free account and the pro account. So that's kind of an interesting thing. But yeah, let's talk about some of the developments that are happening in Bitcoin. Today was pretty wild. As you know, I'm looking for a pullback. And so after a day like today where, hey, we had a pretty strong candle, it was up, 2%. Of course, we have 2 hours to go on this candle, but what's happening? Does this mean that we're going to the moon again? And the answer is not, in my opinion. First of all, let's cover the close yesterday. Our yesterday's close was very, very bearish. We finally, not only did we touch the 20-day, but we also closed below it. And this close was a close that happened to be lower than our prior move here. And we just touched this level here. So anyway, we are softening a little bit. We're definitely going sideways. We have our first inclination that there is a lower low on the table. Well, what do we need next? We need a lower high. So if we pull up and can establish a lower high than 23,725, because that is the ultimate level right here. This was essentially a quick double top that started this move down, and this will be invalidated if we close above it. Can we close above it and still be bearish? Yes, because we are still we're still trading below our death cross on the weekly. So on the weekly, a death cross counts when not only is there a death cross, but it actually closes. So next candle, we will see a cross for sure. And then we have to wait for this candle to close before the death cross is official. So if we have 5 days left on this bar and 7 more on the next one, we have a full 12 days before the death cross is actually official. So we could potentially pull up into that cross still, and it would still be bearish. So I'm kind of looking at a lot of things, but we're taking these markets very, very carefully and calmly and slowly. But could we move down from here? The answer is we will most likely. Part of the reason, so we have our golden cross. The golden cross is official in 2 hours. So even though we have crossed intraday, the close is what we're looking for. So once the close is in, all of the bullishness that is associated with the anticipation of a golden cross is officially fully priced in. And sometimes this can be sell the news type event, especially if we are way too high, which we are. So I'm totally expecting a pullback into the cross. I'm expecting that we will have our first attempt at support on the 50. The 50 is rising fast, and it's currently sitting at 19,825. So this will pull up pretty good. But I'm expecting worst case scenario. Even if we wick down or something, we'll probably interact with the 200 before we really get moving. So those are a couple of things. Now let's talk about Wyckoff. So the Wyckoff is this kind of pattern that that we see a lot of whales pulling and using. So a Wyckoff pattern it's essentially how do whales accumulate and how do they kind of trick retail into buying and selling. And it makes it very emotional. This is why I always say that markets aren't here to be your friend and to just make everything, just give you money and help you have a nice, calm life. Markets are here to trick you out of your money, especially if you're an active trader. There's a lot of emotions at play, and the big money are experts at tricking people into buying at the wrong time and selling at the wrong time. That's how they make their money. So they've become experts at this. Let me just pull up a quick Wyckoff schematic just so you can let's see here. Okay, this will be perfect. So we're looking for a distribution, and here it is. Okay. So if we're following this, what is happening? We are following, first of all, phase A is we move up into a buying climax. Our buying climax is right here. This started our trading range. So our buying climax started us off right up right here. This price is 23,275. So that's where our buying climax happened. We pull back. This is our automatic reaction. That happens here. And then we had a secondary test. It's usually lower than the initial buying climax. So that's where we are right here. Now we pull back into a show of weakness, and then we have some upthrust. So in this case, this could have been an upthrust. This could have been one. And this one ultimately became our upthrust. So right here we had our upthrust. And then we have a couple of other attempts at show of weakness. So we've got these moves down. And then we have one final move up, which is your upthrust after distribution. So this ultimate climax where we had these really tall candles, if we're following Wyckoff, this was it. So this is, you can see how this is slightly higher than our upthrust. So it becomes kind of the climax fake out. It's the ultimate climax fake out. When you come back down into back into the trading range, that gives you a lot of confirmation that the Wyckoff is in play. So we've pulled back down into our trading range, exactly the way we would have expected. And then we have these last point of supplies. And these points here are where the whales are getting the last bit of supply before it dumps. And that's exactly what we are experiencing right now, because we're still inside our trading range and we're doing one of these. It is until we start messing around with the bottom of our trading range that we're really starting to show those shows of weakness, and then we're going to have our markdown. So all of this is planned out. It is all planned in advance, and the goal is to not overreact. I love to say, in trading, for every action, there's an equal and opposite overreaction. And we want to not be overreactors. We want to be level-headed. We want to have our wits about us. We want to let the market do its thing, but not get too excited when things go up and not get too scared when things go down. And having smaller positions and things like that makes that a lot easier. So here we are. We've got 2 hours before the end of day. We're having our last point of supply, and we are in a big fat yellow zone. So yellow zone, we had only like 4, 5 candles in the yellow zone here. We only had 1 here, and we are working on a pretty thick, solid yellow zone. And this is where I would expect us to pull out of. So we're gonna have this yellow zone. It won't flip to red until we have both the 50 and the 100 trading below the 200-day moving average, or 200 period. We're on the 4-hour. 200 period moving average. So we've got a little ways to go before we get down to this level here. But here's our golden cross on the daily. You can see everything on the same chart with my indicator. So some really cool things happening. But yeah, I fully expect this to be a bull trap. This is the final. We've gone full flat. We've consolidated big time. We've dropped, and now we're running up a little bit. This is catching the last few people that are like, oh man, it's been up so high. The news has been telling us how great everything is. If it runs a little bit, I'm just going to buy in because I just don't want to miss this. Well, they've missed it. And this is the last move before things get marked down. And by the time things get really wild down here, the people buying it at the bull trap are going to be selling at a loss and pushing prices down further. And this is where I am excited to put in some longs. I've been waiting for this for quite a while. Like I've been doing this for a month now. But yeah, it's just all about patience and waiting. And you see things happening in the charts, and things don't happen as fast as you wish they would. But some of that anticipation is what makes it so fun. I've heard that in some cultures they'll delay, even though they could ship it to them next day, they delay it so that it arrives around 2 weeks from when they ordered it, because that's when the maximum anticipation is. And I'm kind of one of those guys. I like to wait for things. In fact, I went shopping on my anniversary and I picked out a jacket I really like. And it was a little bit extra. It was a little more expensive. So I decided that I would reward myself. So if I have a really good trade, that I'll go get it. And so now I've been, thinking about it, and I've been excited about it for a couple of weeks now. And so I need a coat, but I'm not getting one because I'm excited about the anticipation part of that. Yeah, I'm a strange one. You don't find too many of me around. But anyway, that's exactly the point. We're up here, we're waiting for the drop, and we'll wait as long as we need to, because it just, from my experience, from the shape of this chart, it's here and it's coming. So a lot of cool things. The final thing I wanted to mention to you is I have not shown you my pattern matcher for quite a while. The reason is because the variance is so high. The variance, what this does for anyone who's joining us, what it does is it takes all the history of Bitcoin and it looks at all the closes, and it takes data points within the last 55 days, and it tries to find the closest percent moves that happened in at some point in the past. And the very, very closest one that matches the data points the best is the top one, and then it goes down from there. So this is the loosest one. But what this means is I'm only using 9 data points, and we have a variance of 24% across those 9 data points. So we're almost 3% off on every data point. Doesn't give you a lot of confidence in what the chart, whether it's a good match or not. But the idea behind this is that I'm expecting that if Bitcoin has behaved a certain way in the past, if we could find a similar time when Bitcoin did something similar, that we might be able to learn from what the outcome was on the other side of it. And so this is our closest match, and obviously we're taking it with a grain of salt because there's a huge variance. I calculated before doing this video, and the move from here to here was about 45%. The move from here to here was only like 34%. So there's less emotion at play in this match. So if that's true, you know, we definitely have seen some upside, and we've done a serious consolidation. So this is a decent, I mean, from an emotional standpoint, I can see it. Because here was our sideways accumulation. We had kind of two sideways consolidations. This low was lower than this low. So we had a kind of an increasing move here, which that was an increasing move here. And then we had this little guy here. What do you think this is? This is our up thrust after distribution. This is the Wyckoff, again, in 2020. We had a quick pump for a day. We came back for a day. And then we had a sell-off. And this is looking very familiar. We had our move up. This was even greater, though. So this was our up thrust here after distribution. And now we're pulling back a little bit. So if we do this the same thing, we'll pull back a bit, get market excited. It wasn't straight down though, because look at our day today. Let me go to the daily. We're having a green candle. So we go down a bit. We get a couple fake outs in, and then after a couple of fake outs, and this was a pretty good fake out. We were heading back up. Things were looking great. The limit, the tops of these is pretty close. And it was finally this final point of supply before we had our markdown. And boom, it happened in 2 days. So this is the type of thing that I'm waiting for. It doesn't happen all at once. When it does, it does. But in the meantime, we have to wait for all that to play out. But I could see something like this happening. And what's cool about this particular experience in 2020 is that when we did have our markdown, you'll notice that our low was higher than our prior consolidation. I'm fully expecting that. I completely think we'll pull to the middle or somewhere in here, and then we will move on and find, we'll oscillate and do our thing. And there's a lot of upside eventually. So this match, it found this match 3 times. These are just different days that just didn't match as perfect as this one. But then there's a match in 2021, and this one, I don't know. Once we started consolidating, we needed one last fake out, and then we were off. This would, if we followed a pattern like this, we'd be in for some more waiting. This is back to the prior one that we just looked at. This example is one where we weren't quite to our top yet, but you can see how we haven't had our run up. So this isn't a great match for that reason. And then eventually we finally had our drop. 2019 is another one. This one pretty much shows that, we're just consolidating before the next run. So there is always that chance that I am completely wrong. And so you always take everything I say with a grain of salt. But finally, this is the one we just saw. So this experience, we had a pretty solid markup with no rest. Had kind of a climax here, pulled back a bit, and eventually had a secondary climax, and then we pulled back. But it just comes from the principle of markets just don't go one way forever. There's always, if we get too hot, things have to cool down. It comes sooner or later. But so in this case, we've had nothing but upside. Everything was lower, and anything where we were grabbing footing was just tiny. Like these moves down were nothing. We're finally getting really choppy and going sideways, which is a huge step. And we're finally also dropping below our 20. So there's a lot of things happening here. But I'm very suspicious of any green candles at this point until we get our actual pullback. When we get our actual pullback, then we're golden. I'm happy to be long, and I'm expecting markets to get going. But nobody knows what it's going to do when the death cross happens. Nobody knows. This is extremely bearish for long-term cases, so we should be rejecting from this. In fact, we should struggle with it for a while, but it's Bitcoin, and we're at the bottom of the bear market. There's probably this might be a nothing burger, but we should react from it at some level. So that's exactly what I'm expecting. Anyway, those are my thoughts. It'll be fun to chat with everybody tomorrow and see what you think. With Bitcoin, you know, flattening and being a little more calm and having a green day, alts went insane. And so I still have a few longs left. I haven't exited everything, but look at Sand up 26%. Pretty wild. A couple of these Jasmines in double digits. Mana is. GRT is just on fire. So anyway, it's pretty cool. I'll be exiting a couple more in the next few days if the charts show that there's a reason to exit. And I'll post those returns in case you're curious on social media. But looking forward till tomorrow. We'll chat it up and get into the markets and see what you guys think out there. All right, that's good for this one. And thanks for being here. We will catch you tomorrow. Oh, it's at 12:30 Mountain Time. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.